Taking a look at interest rates today, I want to focus on the 10-year note. 10-year note moderating today, but we did see quite a move yesterday, so holding on to the gains. 10-year note price around 122.27 right now. The high yesterday was 122.31. The low today was 122.22. So we saw a little bit lower pricing in that 10-year note initially this morning, but then now we're seeing it rally back towards those highs. And with that, we're pushing rates back down to those low levels. We saw the 10-year note, the yield on the 10-year note, 2.60 yesterday, currently right around the 2.61 level, but that's definitely the low end of the range for 2019. Outside of January 3rd, where we saw it spike lower intraday to the 2.56 level, this is the low end of the range for the last 14 months. So we're seeing, again, pressure on rates as we see some of the data rolling out. Now, when you look at the data, CPI yesterday, PPI today, weaker than expected. So again, reduced inflation expectations. That's helping to support the interest rate environment, keeping pressure on rates, prices higher. Also, when you look at some of the things that the market's going to focus on here as we move to next week, the Fed is going to be in view as well, and not right now, because we're moving into a rate decision next week. The Fed currently is in a quiet period, so you're not going to hear anything from the Fed over the course of the next week until that press conference a week from now. So another thing to focus on also is the Fed Watch tool here at the CME Fed Watch tool. You're looking out on the curve here. If you look in December now, it's pricing in a 20% chance of a rate cut by the end of the year. So the dynamics in the marketplace are such that you're seeing, again, the 10-year yield pushing down to low levels, really not attained in almost 14 months. And also the fact of the matter is, if you look at the Fed Rate Watch tool here, there's a 20% chance of a cut by the end of the year.